Good day, viewers. Welcome to another episode of Financial Accounting Made Simple. Today, we are going to be looking at the trial balance. When we are talking about the trial balance, it is good to know that preparation of accounting started from the drawing out of the ledgers to posting of to the trial balance. After preparing our subsidiary books, we post from the subsidiary books to the ledgers. From the ledgers, we extract a trial balance. For one reason, financial statement preparation. At the trial balance assists in making sure that the ledgers are posted correctly. So looking at trial balance, we can look at trial balance as a list or schedule of debit and credit balances that are extracted from the ledger to test the arithmetical accuracy of the ledger. How do we know if what we have posted in the ledger is correct or not? It is through the aid of the trial balance. Have a look at the definition of trial balance. We will look at the uses of trial balance. 1. It assists in checking the arithmetical accuracy of the ledger to determine if our posting are done correctly or not. 2. To determine the ledger account balances, our debit balances and our credit balances. 3. It facilitates the preparation of the financial statements. Without the trial balance, we cannot prepare the financial statements. And lastly, it serves as evidence that the double entry system has been duly complied with. Have a look at the uses of trial balance. Let's quickly look at the rules of trial balance. For the rules of trial balance, this is the rules that govern our double entry system. It simply shows that if everything goes well, the posting that are done in the ledger are done correctly. So on these rules, they are just 4 in numbers, which covers the asset, the liability, the income or gain, and the expenses. And this is what makes up our accounting equation. So looking at the rules of the trial balance, the first rule states that all assets must be debited, which simply means at the end of the posting of our ledger, after the posting to the ledger and balancing of the ledger, our ledger for assets items must have a debit balance. Likewise, our expenses items in the ledger must also have a debit balance. So the second rule is that all expenses must be debited. Items of income or gains must be credited. So in our ledger, if we have a discount receipt, we have a sales, and the last, they must have a credit balance. Likewise, all liability, which include our creditor, bank overdraft, loan, they must have a debit balance. Having look at credit balance, having look at all these rules, we should now go into the procedures for balancing of the ledger. How do we balance a ledger? After posting, we must model this procedure. Number 1, we must post all our debit entries on the debit side in the ledger. Add all the items on the debit side. We are also going to post all our credit entries on the credit side in the ledger. We also sum up all the items on the credit side. We compare the two sides, that is the debit and the credit side. If the debit side is greater than the credit side, insert the difference on the credit side. But if the credit side is greater than the debit side, we are going to insert the difference on the debit side. Have a look at these procedures. In solving questions under trial balance, examination question can come in 2 ways. 1, you are going to be given the balances in the ledger and they will ask you to extract a trial balance. And the second method is where you are going to be given a question. They expect you to prepare different subsidiary books, extract the ledgers, and there you extract the trial balance. So after preparing different subsidiary books, you post to the ledger and you extract the trial balance. Looking at this, we are going to be looking at a question using the first method. In our subsequent videos, we will be looking at the second method, where we are going to prepare different subsidiary books, we post to the ledger, and we extract the trial balance. So we are going to be looking at this question. In the books of Sanwo-Olu, for the year ended 31st December 2025, the following items were given and were expected to extract the trial balance. Purchases, 11,874. Stock, 2,368. Carriage outward, 200 naira. Carriage inward, 310 naira. Return inward, 205 naira. Return outward, 322 naira. Sales, 18,600. Salaries and wages, 3,862. Rent, 304. Insurance, 78. Motor expenses, 668. Motor expenses, 664. Office expenses, 382. General expenses, 314. Premises, 6,800. Furniture and fitting, 350. Debtors, 3,896. Creditors, 1,731. Cash at bank, 482. Drawings, 1,200. From this set of questions, we are expected to draw up a trial balance. But before we start drawing up the trial balance, we need to understand those assets that falls under assets, expenses, liabilities, and income. In the question we have here, we are going to start with purchases. The purchases we have there falls under expenditure, so it's going to have a debit balance. So we are coming to our trial balance, and we are going to put the value of purchases. Purchases is 11,874. The next question is stock. Stock is being classified under current assets when we are classifying our assets. And for stock, it is a current asset item, which is going to take a debit balance. So stock also is 2,368. Stock, 2,368. The next question we have here is capital. Capital is what the proprietor of the business or an investor have invested into his business with the motive of generating returns on investment. The essence of going into the business is not only just to create wealth, it's not only just to make more profits, but also to satisfy your customers. But the major reasons why we are into business is to make more money. So for capital, it falls on part of the liability where it's going to repay back what is being invested into the business. So for capital, it's going to have a credit balance. It's going to have a credit balance. So we have capital, 12,636. Capital, 12,000 on the credit side, 636. The next one is carriage outward. Carriage outward is the cost of moving goods or transporting goods from your store to your customers. So this cost falls under expenses. So it's going to have a debit balance. So we have carriage outward. carried outward. That's 200 naira. 200 naira. The next one is carried inward. Carried inward is the opposite of carried outward. The same way we are going to transport goods to our customers, we are also going to bring in the goods that we are buying from the market, and the cost of paying for that transportation from the market to our store or to our shop is a carriage inward. So this cost is going to have a debit balance. So it's going to be on the debit side since it is an expenses. So we have 310 naira. The next one is return inward. After you have sell particular goods for a customer and the customer find those goods that if they don't meet up with the requirement, the quantity, or the features are not the same with what you want, the customer has the priority to return back those goods to you. So having returned the goods back to you, you are to debit return inward. So we have return inwards. So return inwards is going to have a debit balance 205 naira. The next one is return outward. The same way the customer is returning the goods to you because they are faulty or it does not meet up with the specification, you too might likely want to return those goods back to the supplier. So returning those goods back to the supplier or the manufacturer, it is called return outward. We are taking it back to where we buy them from. And return outward is going to have a credit balance. That's amount 322. 322. The next one is sales. Sales. When we sell most of our goods, we are going to receive money. And the sales falls under income, revenue, or gains. So for sales, it's going to have a credit balance. Sales, 18,600 on the credit side is going to have a credit balance. The next one is salaries and wages. This is an amount you pay to those that are working with you in your shop or in your business. So we have salaries and wages. So salaries and wages falls under expenses. So we have salaries and wages 3,862 on the debit side. 3,862 on the debit side. The next one is the rent. For the shop you are using to sell your market, you pay on yearly basis rent to your landlord. So that also forms part of our expenses. So we have rent, which is 304 on the debit side. The next one is insurance. Maybe you have a very large store where you are selling electronics or you are selling food store, and you don't preempt if there's going to be a burglary, a fire incident. So you insure your business against indemnity, against uncertainty, so that you can be indemnified by the insurance company. So in doing this, that insurance premium you are paying on yearly basis is an expenses. So we have insurance. Insurance. Insurance is 78 naira on the debit side. Motor expenses. This one is even clear. Motor expenses. So this is an expenditure. It will be on the debit side. So motor expenses is 664. 664. The next one is office expenses. Office expenses. Office expenses are those expenses incur in the office. Maybe you are buying stationery, you are buying biros, you are buying papers, all this falls under stationery. They are office expenses. Paying for petrol, they are office expenses. So office expenses is going to have a debit balance. Now this is 382. 382. The next one is general expenses. This is another expenditure. So general expenses. And by our rule of trial balance, all our expenses, they must have a debit balance. So general expenses is 314. 314. So general expenses is going to have a debit balance. The next one is premises. Premises, a building and a part of our premises. So premises falls under our assets. They are long-term assets. So premises is going to have a debit balance, and the figure is 6,800. Premises, 6,800. The next one is debt. The next one is furniture and fitting. Furniture and fitting. Furniture and fittings, we all understand what furniture and fitting are. So what we use in our homes, in our schools, in our offices, they falls under furniture and fitting that we use in all the places I mentioned earlier. So furniture and fitting is also falls under assets, furnitures and fittings. It falls under assets, so it's going to have a debit balance. That is 350. The next item we have here is debtors. Debtors. Debtors are those that are owing us. Those that we have sold our goods to or credit. They are here to pay. So these debtors falls under our current assets. When we are classifying the asset, debtors falls under current assets. So for debtors that falls under assets, it's going to have a debit balance. So debtors, 3,896. 3,896. The next one is creditors. The suppliers that we are owing, our bank that have given us money, they are formed part of our creditors at times. Those that have given us goods that we go and sell and come and pay later, they are part of our creditors. The lenders that have given us money to do our business form part of our creditors. And creditors form part of the liabilities of a business. So it normally have a credit balance. So creditor here is 1,731. The next one is cash at bank. Cash at bank. These are money that we have deposited in the bank. So cash at bank falls under current assets. When we are classifying our assets, you know we have fixed assets, we have current assets. So cash at banks falls under current assets. And being a asset is going to have a debit balance. So we have cash at bank. Cash at bank, 482 naira. And the last but not the least is drawings. Drawings. Drawings are those things we are taking from our business. It can either be cash or goods. Cash or goods. So irrespective of what drawings is one part of the expenses. So we have drawings. Drawings with a debit balance of 1,200. So I will post all these ledger balances that were given. We are now going to sum up the two sides of our trial balance to see if the question we are giving the ledgers are correct. So we are going to start casting all this. We have 11,874 plus 2,368 plus 200 plus 310 plus 205 plus 3,862 plus 304 plus 78 plus 664 plus 382 plus 314 plus 6,800 plus 350 plus 3,896 plus 482 plus 1,200. So the addition on all these give us 22,300. 22,300. So we are going to also sum up all the figures we have on the credit side. So we have 12,636 plus 322 plus 18,600 plus 1731. This is now the total of this is giving us 33,289. 33,289. I'm going to recalculate this. I'm going to re-add all this to confirm if there is a discrepancy between the two totals. So I have 11,874 plus 2 pay 68 plus 200 plus 310 plus 205 plus 3,862 plus 304 plus 78 plus 664 plus 382 plus 312 plus 6,800 plus 350 plus 3,896 plus 482 plus 1,200. So this gave me 33,287. And the other one gave me 33,289. So I will have to check back what I've added here together and go through the figures that were given in the question. So our purchases is 11,874. Our stock is 2,368. Our capital is 12,636. Carriage outward 200. Carriage inward 310. Return inward 205. Return outward 322. Sales 18,600. Salaries and wages 3,864. Rents 304. 78 for insurance. 664 for motor expenses. 382 for office expenses. 314 general expenses. 6,800 for premises. 350 furniture and fitting. 3,896 for debtors. Creditors 1,731. Cash at bank 482. Drawings 1,200. So I'll need to recast my credit side to confirm if the totals are the same. 12,636 plus 322 plus 18,600 plus 1731. 33,289. Okay. There's still a difference of true naira. 11,874 2,368 200 310 205 3,862 304 plus 2 is possible. So having add up the both sides, we have the same totals of 33,289 on the debit side and 33,289 on the credit side. But there are some cases whereby the totals on the debit side might be different from total on the credit side with a slight figure. If you have done all necessary calculations and you go through your questions, you will realize you have not made any mistake. The only thing you just need to do is to look at the difference on both sides and insert the difference as a suspect account. So it's going to be an hanging account, pending where the error is coming from is being detected and corrected. This brings us to the end of this lesson. See you in the other video for the second part of the lesson. Thank you for watching.